Time now for the KMIR financial report. The Dow gained 91 points today as consumer confidence lifted stocks across the board. And Facebook has agreed to buy headset maker Oculus for $2 billion. And the popular candy game, Candy Crush, is about to go public. Its stock goes on sale tomorrow for $22.50 a share. Joining us now is KMIR financial analyst Brian Amidei. Brian, $2 billion for Oculus after Facebook spent $1 billion on Instagram, both companies that have never made a dime. How do you explain that?
It's crazy, Gino, isn't it? It's almost like, Mr. Sherman and Peabody getting in the Wayback Machine and going back to the end of the 90s in the tech bubble. But there is a method to the madness now. Basically companies like Facebook and even Salesforce.com and Workday to a lesser extent aren't really concerned with turning a profit so much as they're worried about gaining market share. So for example, when Facebook bought Instagram, paid $1 billion right before Facebook went public, everybody thought Mark Zuckerberg was absolutely crazy. But now Instagram is catching on like wildfire, and quite frankly, the growth that Instagram experienced couldn't have happened without Facebook's help. So I mean, at the end of the day, you're looking at a lot of these cloud computing companies that are getting into the game now. Box went public today. Salesforce.com, Workday, these are all cloud space companies, and it is very much like the tech bubble back in the late 90s. These companies are coming to market. They have a revolutionary type of business model, and all they're doing right now is they're buying add-ons to add on to their application so that way they can pick up market share.
A little bit. You mentioned the dot-com boom in the late 90s. They were thought to be can't-miss products because of the internet and its explosion. How do we know these are companies that can't miss or companies that they're just throwing good money at?
There's going to be a lot of these companies that are not going to sustain growth. They're going to be acquired. I mean, we fast forward back, we fast forward to today. Amazon.com was said to be a $500 stock back in the late 90s by Henry Blodgett. And today it is in the mid 360s, 370 range, but they've yet to turn a profit. So again, it is unknown as to what the future is going to hold, but I don't think a lot of these companies will still be standing, but I do think the cream will rise to the crop, and I do think that a lot of these companies will make it, and then it's just juggling for position.
All right, KMIR financial analyst Brian Amidei, thank you, sir.
Thank you, Gino. Have a great evening.
You too. We'll be right back.